Welcome to the Explainer. Today we're taking a deep dive into a metric that basically governs your financial leverage, your credit score. But look, we're not going to talk about basic credit maintenance. We're elevating the whole approach. We're looking at it as a scorecard. It's a dynamic tool, right? A precise algorithm. And when you really strip away all the noise, it's something you can actively and aggressively master. So let me ask you something directly. Do you know your current score? I want you to literally stop and think about that exact number for a second. Right now, at this exact moment, what is your baseline? In any high-stakes environment, if you don't know the raw data, you can't possibly know if you have the leverage to play offense. This explainer is fundamentally about putting you in the driver's seat of your financial strategy and setting the stakes. Well, that begins with this single, precise question. You've got to know your real-time baseline. Okay, let's dive into this. 1. The scorecard explained. 2. Checking your credit score. And 3. Improving your score. Section 1. The scorecard explained. Understanding the rules. Let's define what we're actually dealing with here. A credit score isn't some permanent grade on your character. It's not just a static snapshot. It's a definitive financial metric. Basically, it's an algorithm designed to be checked, improved, and ultimately mastered. And treating this as a dynamic tool rather than a fixed grade, that fundamentally changes your financial leverage. It shifts you from being a passive participant in the economy to being an active architect of your financial capital. It actually responds directly to your strategic inputs. And this brilliantly illustrates the ultimate goal we're chasing today, mastering the credit score scorecard. The focus isn't just on managing your credit or scraping by and surviving the system. The objective is mastery, and that phrasing is highly intentional. For an informed player, mastery doesn't mean just avoiding debt or, keeping the lights on. It means leveraging your score to secure those premier interest rates, unlocking premium financial products, and optimizing your capital so the system works entirely in your favor. But here's the thing, you cannot achieve that level of mastery if you don't understand how the scorecard actually operates under the hood. Mastery requires knowing the rules, specifically the algorithmic mechanics that dictate the output. We're talking about understanding the exact weighting of your credit utilization ratios, the precise impact of your payment history, and exactly how the age of your accounts factors into the final calculation. Mastery means recognizing that monitoring your score and strategically tweaking those input variables are the fundamental mechanics of optimizing your profile. Section 2. Checking your credit score. Finding your baseline. Knowing your score versus guessing. The gap between these two states is absolutely massive, and honestly, it's primarily psychological. Guessing your standing in the game relies on passive hope. It's a super vulnerable approach where you just assume everything is fine until a lender tells you otherwise. Actively knowing your score, on the other hand, is about active data ownership. It gives you immediate leverage and a solid, undeniable baseline. You literally must eliminate the guesswork if you want to take absolute control of your financial profile. So the crucial point is that checking your score isn't just some boring administrative chore. It is the foundational action. It's the crucial first move that has to happen before any optimization is even possible. Dropping this pin on the map isn't just about reading a 3-digit number. It's about actively auditing your profile for reporting discrepancies, unauthorized inquiries, or structural errors that could be artificially suppressing your leverage. I mean, you can't plot a course for growth without rigorously verifying exactly where you're starting from. It really breaks down simply. Step 1, access the scorecard. Step 2, check your score. Now, I know these steps might sound incredibly rudimentary to anyone who's ever opened a bank account, but the true insight here isn't the mechanical act of typing in a password and logging in. It's about transforming this from a one-time thing into a rigorous, scheduled habit. It's about building a systematic routine where you own the data week over week, month over month. Because once you integrate that routine, the strategic game truly begins. Let's move to and see how this builds into Section 3, improving your score, taking strategic action. Now, what's really interesting about this framework is how it structures the entire process as a continuous cycle. We call this the mastery loop. Number 1, you check the scorecard. Number 2, you deploy improvement strategies based on exactly what you found. And number 3, you achieve mastery. This perfectly highlights the dynamic relationship between checking and improving. It is not a one-and-done event. It's an ongoing, strategic loop that keeps your financial health optimizing automatically over time just by feeding it better data. Because leveling up takes decisive action. It requires your active participation based on the hard data you just evaluated. You can't just monitor the scorecard and expect passive growth, right? You have to take those insights and apply real, targeted effort. That means making strategic adjustments to your credit utilization, like keeping it well below the standard thresholds, deliberately expanding your credit mix to demonstrate diverse management capabilities, and timing your inquiries for maximum leverage. That is what real action looks like. The whole journey maps out sequentially. It starts with day one, the immediate action of checking your score. From there, you enter the ongoing phase of actually improving that score. And this is where you leverage the compound interest of good financial habits. Improving a score requires a sequence of continuous actions, steady routines, and smart choices compounding over months and years. There's no magic overnight fix here, but that sustained effort naturally builds into the future phase, mastering the scorecard. That's where optimization just becomes your permanent compounding baseline. So, after breaking down the fundamental directives of checking and aggressively improving your credit profile, the challenge is pretty clear. The algorithm is there to be monitored, and the input variables are entirely within your control to optimize. You have the framework to elevate your strategy right now. You know the mechanics of the loop. But the real question to ask yourself is, are you managing your scorecard, or is your scorecard managing you? Are you ready to take ownership today?